And hello, welcome again to another live. I'm Neil Millard, your expert. Feels odd saying that, but hey, I can help you become a contractor, or if you already are a contractor, I can help you with your accounts and your compliance and your cash flow. Today we are talking about national insurance. Excuse me. So, national insurance, what the heck is that? Well, if you're in the UK, hopefully you are, and you're an employee, you've been paying national insurance. So what's the deal with national insurance? It is essentially another tax. You've got income tax, and then you've got national insurance. What's it for? Good question. Well, if we go onto the Gov website, it says Class 1 employees. This is the category that you would fall into if you've had a pay slip and you've earned a certain amount of money. You'll get national insurance taken out of your pay packet automatically, whether you like it or not. And it gets you Class 1, which is basic state pension, additional state pension, whatever that is, new state pension, whatever that is, and then a bunch of allowances like the new style job seekers allowance. Should you find yourself out of work, it means you qualify for job seekers allowance. And contribution based employment and support allowance. Another support scheme if you find yourself on low earnings or no work at all. Maternity allowance, which interestingly you can only claim if you're female, of course. There is a paternity allowance, but it's not actually provided by the government. And bereavement support payment. Unfortunately, I have no idea what that is, but I'm sure it's very helpful to those that need it and need some time off. Like statutory sick pay, I would imagine that the government does cover statutory sick pay, but not through national insurance. That's something else. If you're ill from work for a certain period of time, then the government will pay towards salary. Anyway, that's a slightly different subject, but yeah, this is stuff that you pay Class 1 as an employee, and you gain these benefits for paying those. Interesting footnote at the bottom there, though. Class 4 contributions paid by self-employed people with a profit of 12.5 grand or more do not count towards state benefits. And I'm not sure why that's there. I think they're trying to phase out Class 4. There is Class 2 that you would pay as a self-employed person, which gets you most of the benefits apart from job seekers. If you're self-employed, then technically you can't be out of work, or the theory goes anyway. So, but national insurance is paid directly from your salary, as I said earlier. And usually, if you earn more than £1,048 a month, which is about 12,570 off my head. No, they've aligned it with the insurance tax code, the insurance tax code. That's what I'm trying to say. If you've got a tax code of 1257L, then that's when you start paying income tax. If you've gone beyond your personal allowance, it's also the level at which you pay national insurance, and that's at 12% of your earnings. Only back in the winter months earlier last year, the government did announce that they were going to give a slight tax break to people, in that you only have to get 10% deducted from your salary for January, February, March, and April. We don't know yet whether that's going to extend beyond April. We'll find out in the spring budget. You'll also notice that if you earn more than about 50k, then that drops to 2%. So anything over and usually for tax, the more you earn, the lower it gets. So you pay 12% on the bit in the middle between 12k or 12.5k and 50k, and anything you earn over 50k, you only pay 2% national. insurance on. However, that's not the end of the deal. The employer, the person who's paying you, also gets to top up on top of that. On top of your 12%, they also have to pay national insurance on top of your wages. It doesn't come out of your wages. An additional cost to the employer on top of your. So how does that work from the contractor perspective? Well, you can decide your salary as a contractor. So where we've got these rates between 12.5 grand a year and 50k a year, you can decide to pay through the payroll anywhere between that number or even less than that. I mean, the minimum wage also comes into effect, but if you're a director of a limited company, then minimum wage doesn't apply to you either. So you can pick a smaller number, and there's a good reason why you might do that. So in terms of employer national insurance rate, as you can see there, the figure is actually lower. So it's only 0% for the employer between 533 and 758 a month. If it's below 123, then that's below a threshold, so you don't pay anything anyway. And then there's this sort of like narrow zero rate band in the middle. As soon as you reach the £758 a month, then it goes up to 13.8%. And as you can see from the rest of the table there, it always stays at 13.8%. So in this case, unlike when you're an employee, when you're an employer and you pay somebody more than 50k a year, you still contribute 13.8% on top of the wages. So this is a little bit different to as you can see it from an employee's point of view. And the employer is also paid, so like I said, it's paid out of the profits, it's not out of your wages. There's also a thing called Class 1A and Class 1B. Now, if you're on Class 1, which is the normal rate for employees, you then got this A and B, which is you pay national insurance on top of, so you've got your salary and that's coming out. That's employees, or NIEE as they call it. NIER is the extra bit that your employer pays. And as a contractor, you are the employer. You need to be aware of this extra 13.8%. Now, Class 1A and Class 1B are national insurance that you pay on top of expenses, I know, right, and benefits. So if you've paid for something that your employee has received as a benefit or as an expense. Now, these aren't allowable expenses. You know, if it's a legitimate business expense, then that's just an expense claim back. You know, paid for that train ticket to go to a conference that your customer wanted to go to, and you've then claimed that train ticket cost back. That's an expense. That's fine. In terms of these expenses and benefits, it's what they would call benefits on kind, stuff you might find on your P11D. And it's where, you know, if you've got a company car, then you get to pay national insurance on benefits like and company car. I probably shouldn't mention that because that's a whole different complication of things. Better example is one that I wrote about earlier on my blog, which is the Christmas allowance. If you exceed the Christmas allowance per staff, then that member of staff has to pay income tax on the Christmas dinner, essentially, Christmas party. And likewise, your employer would have to pay national insurance on the cost of that Christmas party as well, if it sits outside of the allowance. So this extra 13.5% can pop up all over the place. Thankfully, there's no national insurance due on dividends, or at least there isn't yet. I'm not aware of any plans that they're going to put national insurance on dividends, because that would be quite challenging. Now imagine you receive a dividend from a banking share that you have on the stock market. How would you pay national insurance on that? I mean, you could through self-assessment in theory, but I think that would just be complicated to get into. So as of yet, there's no national insurance dividend. It's only due on the salary. And so I mentioned that there's this lower thing. Go back a couple of slides. This threshold here, this 658, that works out at £9,090 a year. And so you'll see that many accountants will say to their customers, oh, if you're going to pay yourself a salary, then pay it under the 9,000 threshold, and that's because you then don't attract the 13.8% on the employer's side. It doesn't make any difference to your income tax, but it's just the NI for the. Anyway, if you need any clarification, just ask me a question in the link below, and I'll attempt to clarify it if it's not clear enough already. But being a contractor does give you lots of choices like these, like how much you get paid, like how much you save for your retirement, how much you get paid personally, when to take holidays. But that choice also means compliance. It means you need to understand the implications of the NI payment if that's the level that you want to do. So these decisions bring responsibility. If you decide to pay yourself less than 9,090, then you won't have any national insurance liability, either as an employer or as an employee. But you'll probably want to pay some, because there's that gap in the middle, that 0 rate band. If you pay yourself within that 0 rate band, then you qualify for the benefits, but it doesn't cost you anything at the moment. These rules are always subject to change. But it does meaning you have to stay compliant. And when you do report stuff to HMRC, you're reporting the correct amount. And choices with cash flow. When you've got the cash flow, you've got the invoice going out, they then pay the invoice, that money then sits in the business bank account, and you have a choice of how that gets paid to you. Does it get paid to you as salary? You might want to take 100% of it as salary and pay the income tax and national insurance on it. There is a little bit of difference between then taking a smaller amount and taking the rest in dividends. And there's a split to be had. That's a conversation you'd have with your accounting professional, or come along to one of our workshops and we can discuss that with you as well. But you can decide how to account for it, what category it's in, and when your payday is. And are you ready to be a contractor? We've got a quiz to help you understand if you're ready or not. And of course, if you're not ready, or if you are ready, we're here to support you. Give us your details, and then we can answer any questions with a one-to-one session with me once you've done that quiz. Anyway, that's this session to a close, and thanks for your attention. I'll see you next time.